Greetings. Welcome to GDIC's webinar for the OASIS Phase II Financial Services domain. This webinar covers both small business and unrestricted tracks for the financial services domain. My name is Cal, an AI assistant, and I am your host today. With me is Ab Vand, VP for Capture at GDIC and a subject matter expert on self-scoring proposals. Ab will guide you through today's deep dive into the OASIS Phase II financial services domain opportunity. Ab has over 30 years of experience in capture and proposal management. He is considered an expert in self-scoring as well as traditional proposal and capture efforts. Ab has managed over 1,000 successful capture and proposal efforts, including over 200 successful self-scoring proposals such as OASIS Plus. He has also held numerous training webinars for various APMP chapters and Apex offices throughout the US. So a few housekeeping notes. First, the link to the recording of the webinar will be sent to you within 24 hours. Second, we will hold a Q&A session at the end. You can send your questions during the webinar by the chat system to the right of your window and Ab will address them at the end. Third, you can download this presentation by clicking on the link under File on the right-hand side panel on your window. We highly recommend you download the slide deck so that you can always refer back to it. So let's see what this webinar covers. We will first give a quick intro to GDI Consulting Services. Then start with giving the general information on OASIS Plus. Next we will have a thorough discussion of the scope of the financial services domain. From there, we will deep dive into the scoring system and discuss score optimization as well. Ab will also touch on how you prepare the actual proposal, or what we call substantiation. The importance of compliance and factors such as pricing and partnering are also covered. Lastly, Ab will provide some strategy recommendations and experience sharing and then finish with the Q&A session. So with that, I will now hand over the control to Ab to start the webinar. Ab.
Hello everyone, and thank you, Cal. As Cal mentioned, we highly recommend that you download the slide deck to refer back to it. Due to limited time we have, I might skip some content, but I wanted to have a full slide deck prepared for you so that you can always refer back to it for full explanations. Also note that we are holding separate webinars for all the 13 domains under OASIS Plus, and I will post the link to the webinar schedule page on our website in case you want to participate in other domain-specific webinars as well. But note that in each webinar, some of the information is similar. I just don't want you to, see repeat stuff. But when we dive into the scoring system of that particular, domain, that's where the differences arise. Also, for those of you who are unsure if you should go after this opportunity at all and whether you have the minimum requirements or not, we have a pre-qualification assessment service for just $490, and we assess your contracts and tell you your chances and gaps so that you can be sure of your eligibility with minimal cost. I will put the link to that page on the chat as well. Okay, let's start now. Let me very quickly give you a short intro to our company and then dive into OASIS Plus. So GDI Consulting has been in business for over 15 years, and we have established ourselves as the premier self-scoring experts in the market. This is not a boast. Just see those numbers, including the fact that we prepared 97 successful proposals for our clients in OASIS Plus, the initial bidding. So 97 awards we got. That speaks by itself. We have over 650 satisfied repeat clients, 86 of whom are very large businesses, some on the top 10 list of largest defense contractors. You can later refer to this page for more information on our company because we're short of time, so I'll skip the rest of this stuff. Now, I won't go into the details of our services as most of you are repeat webinar viewers, and will just suffice to say that we have 4 main lines of service, including proposal development, capture management, specific support services like competitive intel or price to win, and finally customized training. So we strive to be a one-stop shop for federal and SLED BD needs of small and large companies. Okay, let's start with the OASIS Plus then and get some general info about it. We call it OASIS Plus 101. So it's good to take a look at the previous OASIS contract, which ran from 2015 to 2025. These years are approximations as there were different pools awarded at different times. So this is the graph showing the government's spending on this contract during its course of performance. And you can see that towards its end, the government was spending about $10 to $12 billion per year on this contract. Blue is the unrestricted contracts spendings, and orange is the small business contracts spending. Okay, and in terms of the top 10 agencies using OASIS, obviously GSA has been the main user, but since these numbers are all in the billions of dollars, don't underestimate the other agencies involved. More than 30 agencies have been buying services through this contract. Okay, so let's now look at OASIS Plus. That was OASIS, the previous contract. Let's now look at OASIS Plus. So we have the general information. GSA is the contract owner. It's a multiple award IDIQ GWAC, government-wide acquisition contract, meaning that all federal agencies can actually put out task orders under this. It has an open ceiling, number of awards unlimited, and this phase 2 also unlimited as well. Contract duration is 5 years plus 1 additional 5 years. You can think of it as an overall 8 years now, because we are nearly 2 years into it, or less than 2 years actually. First round was awarded. Phase 2 has started January 12th, 2026, officially has started. And it's a rolling admission system, so there's no due date specific. Obviously, the sooner you can get on it, the better, because then you can participate in the task orders that are out there. Now, there are 6 tracks, as they're called. You can think of it as 6 different contracts. The contracts are segregated by the type of company. So there is a total small business contract or track, 8A small business, hub zone small business, STVOSB, WOSB, and unrestricted. So these are the 6 tracks that we have. Now, just so we have one vocabulary, from here on, when I discuss small business, when I say small business, I mean the first 5 tracks. So all these, the total small business, 8A, hub zones, STVOSB, WOSB, from here on, when I say it's a small business, especially when we go into the scoring, meaning all these 5. So if you're in any of these, that's you. And then we have the unrestricted, or UNR for shorthand on that. Now, in terms of the numbers of the original OASIS Plus awards, you can see that 588 unrestricted, 1,375 total small business, STVOSB 345, WOSB 309, 8A 181, Hub Zone 131. The numbers might be a little bit more than these because these are, I think, a couple of months old. They might have awarded a few here and there. But do remember that, first of all, there is no competition. So these numbers might double as far as the government is concerned. I mean, there's no competition for phase 2. And also don't forget that this doesn't mean that, for example, if you're going for STVOSB, you have 345 competitors. No, these are, separated into the domains. So we're going to have, these are about the 8 previous domains. 5 have been added for overall 13. So it's not that, these are the numbers of your competitors in each of these set aside economic, socioeconomic types. It also depends on the domain as well. Now, in terms of the domains, left-hand side, the orange domains, these are 8 of them. These were the original OASIS Plus. Now they've added 5 more on the right-hand side, the green ones. So technical and engineering, T&E, management and advisory, M&A, research and development, R&D, intelligence services, enterprise solutions, which is only for unrestricted track, facility services, logistics services, environmental services, and to the right, business, these are the new ones, business administration services, human capital services, financial services, marketing and digital outreach services, and finally, social services. So it nearly covers all types of services work except horizontal and vertical construction. Even construction trades are included in facility services domain. So even the trades are there, just the horizontal and vertical construction services are not there. Now, many call this non-IT services contract. That is a mistake. Out of the 97 clients that we helped win on this, 36 of them were IT companies. So depending on the type of IT work, many of them fall in the parallel to the type of work done under, for example, technical and engineering, the first one, first domain, research and development, third one, and intelligence services, and perhaps even in the new domains. So that is why many IT services companies can and should also go for this opportunity. Okay, so let's now start the main topic of our webinar, which is the financial services domain. The financial services domain includes services that support government's financial operations and compliance activities. It includes budgeting, accounting, auditing, and grant oversight. Also covers loan servicing, asset tracking, and cost analysis. So agencies use these services to improve performance, outreach, or internal operations. You should expect to see any of these types of scope and services in the upcoming task orders once you're awarded the IDIQ. So the relevant NAICS codes for the financial services domain include what's listed here. I will come back to this list and the NAICS codes once we discuss the scoring system. Now, if your firm supports capabilities in the financial services area, this is your chance to gain a spot on OASIS Plus. From small business specialists to large and experienced companies, there's room for many participants. So who should actually participate? Perhaps CPA firms with experience, supporting federal financial operations, or even without experience, but who want to actually participate in government bids, government contracts, consulting firms with grant, audit, and compliance services, vendors with financial systems, integration, or data analytics, previous Schedule 520 contractors, that's GSA schedule, migrating to OASIS Plus, small businesses supporting OMBA 123 or internal controls, these are the other contracts, firms that provide audit readiness and risk assessments, organizations working with CFO Act agencies or DOD-FM, businesses with GAGAS, if I'm saying it correctly, compliant past performance, JV or mentor protege teams in financial advisory services, and subs seeking to partner with large primes in financial services and the financial domain. Okay, so this is just a list of people interested. So if you're good that we want to go after this domain, let's understand the scoring system. I'm assuming that you're familiar with the concept of self-scoring proposals. We don't have the time in this webinar to go over that. If not, however, please refer to our previous webinars on this subject on our website. There are a lot of webinars that we held on self-scoring, and you can go in more detail there. So these are the overall system for the financial services domain. The maximum score you can get is 50 points for small business and unrestricted. And you need to be above 36 for small business and above 42 for unrestricted to actually get awarded. That's the minimum qualification score. Now, how do you get those points? There are three main score factors called qualifying projects or QPs. Second one is federal experience projects or FEPs. And then the third one is systems, clearances, and certifications. And you can see that it's essentially the same, 39 for qualifying projects, 5 for federal experience projects, and 6 points from systems and certifications. So and it's the same for small business and unrestricted. And just to remind you, whenever I say small business, I mean 5 different tracks. Total small business, women-owned small business, 8A hub zone, and STVOSP. Now, from these numbers, 39, 5, and 6, you can see that the key player are the QPs. Now, why do we say QPs? Qualifying projects, meaning 5 contracts, 5 projects. That's why it's QPs, not QP. So 5 qualifying projects will give you a total of 39 max. So let's compare them here in a graphical comparison of the 3 main score factors. You can see how important QPs are compared with the other 2. That's why everything revolves around those 5 contracts that you bring to the table. And let me put your worries at rest right here. If you don't have 5 qualified contracts, and we'll see what the qualifications requirements are, you can always bring in partners and team members and use their contracts. This is allowed. So on that basis, let's now dive into each of these 3 main score factors and see what sub-factors they have and how the scoring works. Let's start with the qualifying projects, the QP factor, which is the most important one. Now, there are 5 sub-factors under QP: relevance, scale, integrated experience, management and staffing, and past performance. If you look at them graphically, you can see here again, there is one sub-factor which is the most important one, and that is relevance, which gives you 20 points. Remember, we had 5 contracts, each will give you 4 points. 5 times 4 is 20 points. Now from here on, wherever I show blue, blue is small business and orange is unrestricted. Okay, now let's start with the first one, which is relevance, the most important one. So you can see you can have up to 5 QPs or contracts, with each contract getting a maximum of 4 points for a total of 20. Now, contracts can be federal prime contracts, federal subcontracts, or commercial contracts. Any of those are acceptable. If you're using a federal prime contract, they can be standalone contracts or task orders under multiple award IDIQs or BPAs, or single award IDIQs or BPAs, or FSS or GSA mass or BOA. Note that I say task orders under these, not the IDIQ itself. So you can use the task orders under those. Now, OTAs, other transaction authority contracts, are allowed. They're acceptable, but you cannot use grants and co-op agreements. Obviously, contracts must be based on FAR Part 37 services. So you can't use a contract that was to supply some sort of equipment to the government or to the client. It has to be services. Now, there are 4 requirements for the 5 QPs that you bring to the table. First requirement is the minimum annual value. Contracts must have an annual value of at least $500,000 for small business and $1 million for unrestricted. Now, how do you calculate that? For ongoing projects, the total expected contractual value is divided by the total expected, again, contractual duration. To give you the annual value. So what is written on the contract award, that counts. So if the contract says it's maximum $10 million for a duration of 5 years, perhaps one base year and 4 option years. So you divide the $10 million by 5, including all option years, and you come up with $2 million annual value. That's how you calculate for ongoing projects. Now, for completed projects, The way you calculate it is you get the obligated, the real amount paid to you, the actual amount paid to you, divided by the actual duration of the contract. Sometimes the contract, is 5 years on paper, but ends in 6 years, or even earlier, is canceled in the 5th year or 3rd year. You use that actual number to calculate the annual value. And you can't pick just 1 year and say, hey, this year I had a larger amount. If it's a 5-year contract, you have to use the total value and divide it by 5. Second requirement is contract date. So if the project is ongoing, it must have at least 6 months of performance as of January 12, 2026, meaning that you have to have received it before July 12, 2025. If it's completed, the completion date must be within the past 5 years from January 12, 2026. So again, it doesn't matter when it started, 30 years ago, but it must have been completed within the past 5 years. Third requirement is past performance rating. Each QP you bring to the table must have a past performance rating of above, and note that I'm underlining above, not equal to satisfactory. That's the average of all subfactors on a CPAR. Now, if you don't have a CPAR, you can use a JP6 form that comes with the RFP. Finally, fourth and most important is relevance. Obviously, this subfactor is called relevance. So the scope of the contract must be relevant to financial services. There are two ways of getting that. One is through auto-relevant NAICS codes and PSCs. So auto-relevant, I will list on the next slide. These are the NAICS codes that if your contract have, each QP has that NAICS code, you don't need to provide any proof or anything else. If it doesn't, then there is a form that comes with the RFP called JP3. You have to get that signed by the contracting officer saying that it is relevant to financial services. So the auto-relevant NAICS codes are these listed here. So 541611, for example. If your contract is 541611 has that NAICS code, it is automatically considered relevant as far as the NAICS code and the scope of the contract is concerned. And the size standard is listed here, so you understand that if you're above that size standard in terms of revenue for that NAICS code, you're considered large for that NAICS code. Okay, now let's go to the second, that was relevance. Let's go to the second subfactor, which is called scale. So for each QP contract, you get a point if the annual value is greater than or equal to $1 million for small business and $2.5 million for unrestricted, if your submission is for unrestricted. Or maybe the value is not that high, but the number of FTEs, the full-time employees, is equal or greater than 5 for small business and 12 for unrestricted. So either of these, whether it's the value is above that range or the number of FTEs is above that range, you get 1 point for that QP. Now, for the same QP, you get an extra point, a second point, if the value, the annual value, is $2.5 million for small business and $10 million for unrestricted, or maybe the value is not that high, but the number of FTEs is greater than or equal to 12 for small business and 50 for unrestricted. If that's the case, you get a second point for that QP. Note that the credit is provided for total annual value, the project value, not just the portion relevant to this domain. So maybe the contract involved other things. They're not going to look and sit down and calculate how much was the financial part and things like that. The total value, that's what they want to see. Also, the total maximum score for this subfactor is 6 for both small business and unrestricted. So even if all your QPs get 2 points, which turns into 10 points overall, you will not get more than 6 points for this subfactor. So consider that when you're calculating your total score. Now let's discuss the third subfactor, which is called integrated experience. Here you get 1 point per QP if 5 or more labor categories were used in the execution of your contract. Like, you had an engineer, you had a clerk, you had a manager, things like that. Those are considered LCATs. Or for that QP, if the scope of the contract covered 3 or more domains out of the 13 domains, you get a point. So maybe the scope of the work was towards financial, but you did a little bit of a, for example, business administrative services as well. You did a little bit of marketing and PR as well, or any others. There are 13 different domains. So if you can show that you had 3 or more domains involved in the scope, you get a point. But the point is this: it's an or. So meaning that if a QP has both 5 or more LCATs and covers 3 or more domains, you don't get 2 points for it. You still get 1 point. That's why the overall score for small business is 5, and even for unrestricted it's less, it's 4. Okay. Fourth subfactor is management and staffing. For each QP, you get 1 point for any of these features in your contract. First one is surge. Now, what does surge mean? So the definition of surge is increase of more than 10% of the value of the contract or the amount of work in less than 45 days of lead time. This is the definition of surge. So if you have surge in your contract, or if you use 3 or more subcontractors, 5 in case of unrestricted submission, or if you use 5 or more personnel with clearance, secret, top secret, and the Q for DOE, or if you had 5 or more personnel with CGFM or CDFM certifications. CGFM is the Certified Government Financial Manager. It's issued by the Association of Government Accountants. CDFM stands for Certified Defense Financial Manager, is issued by the Society of Defense Financial Management. They used to be called American Society of Military Comptrollers. So if you have 5, if that QP had 5 personnel or more having either of these 2 certifications, you get a point. Now, you can get all 4 points for 1 QP, unlike the previous subfactor. But at the end of the day, the maximum scores you can get for the whole subfactor is 5, whether it's small business or unrestricted. So that those 5 points can be spread between the 5 QPs, or you might get 4 points out of 1 QP and 1 point from another QP. It's up to you how you select the contracts. Okay, and the last subfactor is past performance. So if all 5 contracts have a positive, that is above satisfactory, past performance rating from your CPAR or JP6 form, you get a maximum of 3 points. If 4 out of the 5 have above satisfactory rating, you get 2 points. If 3 out of the 5 have above satisfactory rating, you get 1 point, and below that you don't get any points. A few important notes. You can use a JP6 form. It's like a PPQ. Only if CPARS is not available. And you can't use any PPQ form. It has to be JP6 form. You must have a JP6 form. Also note that I said above satisfactory, and that's the average of the CPARS rating. If it is satisfactory, it is not acceptable. It has to be above satisfactory. And on the next slide, I'll show you how to calculate that. Now, finally, for the UNR track, if all 5 contracts, 5 QPs, had a very good or exceptional rating for small business utilization subfactor in the CPARS, you get 1 extra point. Okay. Now, question is, how do you know if your CPAR is above satisfactory? Because it has many subfactors. Usually these are the subfactors in the CPAR rating, which are rated separately. Technical or quality of service, sometimes called, schedule or sometimes called timeliness, cost control, management or sometimes called business relations, and finally small business subcontracting or utilization, if applicable. Now, the way you calculate your average score is that you give a point score to the ratings. That is, exceptional is 5, very good is 4, satisfactory is 3, marginal is 2, and unsatisfactory is 1. You replace these numbers for the ratings, add them up, and then divide by the number of applicable ones. If a rating is NA, you don't count that. So let's look at the example in the orange box. So here we have technical, which is exceptional. We put a 5 for that. Schedule is satisfactory. We put a 3. Cost control is marginal. We put 2. Management is satisfactory. We put 3. And small business utilization is NA, so we don't count that. So the calculation is 5 plus 3 plus 2 plus 3 equals to 13. You divide it by 4, not 5, because small business utilization is NA, which comes to 3.25. Now, satisfactory score is 3, and you have 3.25. So this is considered above satisfactory. You're good to go. You can use this contract, and you get the points for past performance. Okay, so this is how you calculate above satisfactory. There is also one special case that I want to cover. If you have a single award IDIQ or BPA, remember it has to be single and you have to be the prime for it, IDIQ or BPA. Then you are allowed to bunch up the task orders together and consider it as one of the 5 QPs. You can only do this once. So one of the 5 QPs can be like this. So you can do this. It's like this. For example, consider the case of a single award IDIQ. You have that, and your task orders are all small. I'm talking annual value, obviously. There are $100,000, $125,000, and remember the minimum had to be 500K, so you can't use any of the task orders. But what you can do is that you can bunch up, say, 5 or 6 of these together to get above 500K. Bunch up the number of FTEs used, bunch up the number of subcontractors used, and get points for all of those sub-factors. Okay, so this is something that is very helpful if you have single award IDIQs with a lot of task orders under them. You can bunch up. I've seen companies, bunch up 20 or 30 small task orders to actually create the scores that they want to get. Okay, so that was the first main score factor, the QP factor, and its sub-factors. Let's now consider the second main score factor, the FEP, or Federal Experience Projects. The name is in it, Federal Experience Projects, so you can't use projects that are non-federal here, including you can't use subcontracts because you are not the prime. Okay, so there are 2 sub-factors involved here. One is number of task orders, and one is the number of federal agencies that you have worked with. You get 4 points for task orders and 1 for federal agencies. I'll go into each separately. So for the task orders, you get 1 point for each task order that you have performed under a multiple, and this is emphasis is on multiple award IDIQ on BPA, not single award. That doesn't count. Has to be multiple award IDIQ or BPA, and you must obviously be prime on that. You must the maximum points is 4, meaning that you can have up to 4 different task orders, 1 point for each. Now these can be coming all from one multiple award IDIQ or BPA, or under different ones. Doesn't matter. It's up to you. Also, these contracts don't have to be the same ones you used in the 5 contracts for QPs. They can be completely new ones. Or it's up to you. Maybe you've used 1 or 2 of them in your QPs. That's up to you. The requirements is therefore, first, they must be task orders under multiple award services, IDIQs or BPAs. They must have an annual value of over 250K, not 500K, 250K. And it's the same for small business and unrestricted, 250K annual value. And third, they must be ongoing for 6 months or completed within the past 5 years. Now, important, their scope doesn't have to be relevant to the domain. So they don't have to be financial services contracts. You can bring in, IT contracts. You can bring in marketing contracts, whatever. As long as you've worked, you've received these task orders under multiple award IDIQs or BPAs, and with those requirements I mentioned, you're good to go. Now, with regards to the second sub-factor, it's about the number of federal agencies you have worked with. So if you can show that you have worked, meaning you've gotten contracts with 3 different agencies, you get 1 point overall. These can be standalone contracts or task orders. You can't use an IDIQ itself. You have to use task orders. And that collection of task orders doesn't work here. You have to have one task order. The value must be over 250K. As I mentioned, the first requirement is prime federal service contracts. Second is that the value must be over 250K. Same for small business and unrestricted. And in terms of recency, 6 months of performance if ongoing, and if completed within the past 5 years. Again, you don't have to show relevance to the domain, to financial services. Contracts don't have to be the same ones you have used elsewhere for the QPs or even for the task orders under FEPs. These 3 contracts that you bring to the table for working with 3 different agencies can be completely new ones. Okay, so that was the second main factor, FEP. Now the third main factor is system certifications and clearances, and we are short of time, so I will go quickly over these. You can see that in the comparison, accounting system, facilities clearance, and other certifications. Now, for accounting system, you get 1 point for small business if you're in an approved accounting system, and 2 points for unrestricted. For unrestricted, to get the 2 points, you have to have 3 of these that are listed here: accounting system, approved rates, purchasing system, estimating system, EVMS, material management and accounting system, and property management system. If you have 3 of these, you get 2 points. If you have 2 of them, you get 1 point. Now, all of these, whether it's small business or unrestricted, are, when I say approved, mean government approved, not third party approved. So you can't use an accounting system that was approved by a third party. It has to be approved by the government. And you provide documentation to prove that. Now for facility clearance, it's easy. 1 point. It doesn't matter if it's secret or top secret. You get 1 point if you have it. It has to be active. Pending facility clearance doesn't count. It has to be an active facility clearance. Now for other certifications, there are 4 different types: CMMI level 2, ISO 27001, ISO 9001, and CMMC level 2 or higher. If you have all, you get 1 point for each of these. Now, the maximum you can get for small business is 4 for all 4. Maximum for UNR unrestricted is 3. So any 3 of these, if you have, you get 3 points. 1 point per certification. Okay, now let me also touch on the idea of mentor protege, because it has its own rules for QPs and FEPs. So if you're submitting as a mentor protege JV, for QPs, at least 1 QP must come from the protege company. So you can't have the situation as all 5 contracts coming from the mentor. At least one of them must come from the protege. But the minimum threshold annual value for each domain is halved when a protege submits a contract. For example, for financial services, small business, the minimum annual value for QP contracts, as we mentioned, is 500K. But for a mentor protege JV submission, if the contract is coming from the protege, it can be above 250K and it's acceptable. It receives the points. The same stands for FTEs. If 10 FTEs are needed to get a point and the contract is from a protege, then if it has 5 FTEs, you're good to go. You get the points. The same rule applies to FEP contracts. So for example, for a task order under a multiple award IDIQ, if it's coming from the protege, it can be $150,000 and above, and not $250,000 and above. Finally, these rules apply to UNR submissions too. So for a mentor protege JV submitting under financial services unrestricted, the annual value of the protege contract can be above 500K instead of 1 million K. So these were the specific rules for mentor protege JVs. So that was the scoring system for this domain. Let's now discuss eligibility assessment as well as score optimization. These are the first steps that you should take. If you have multiple contracts, use a tool to first profile your contracts and see what score each will bring for you, and then which 5 QPs to select to maximize your score. I'll show you our eligibility assessment tool on the next slide. To do that, you need to read the RFP and the Q&As, usually the previous Q&As and the latest RFP documents for the original OASIS Plus carefully and fully understand the requirements for each score factor. You must create a table to score each score factor for each of your QPs. Then estimate your best score and do a gap analysis of where you're short. In doing that, focus on maximizing the score on the 5 qualifying projects and maximize the use of your commercial subcontract projects if possible. Now, following your gap analysis, decide on partnering and multiple partners, maybe, to boost your score. You should consider outsourcing the eligibility assessment to ensure you have a good chance of success. Now, this is a form we use to do eligibility assessment for our clients, and I'm going to give you the link for this service as well. It makes sure that you don't spend money on something that you don't have a chance on, and also ensures you know where your gaps are to bring on team partners. So for each contract, you have to, on the column on the right hand side, the yellow column is where you actually respond to them, the value, duration, whether you use 5 FTEs or not. So these are the specific questions that we have prepared that you have to answer to. And then based on that, this is another page. Now, based on the previous slides form, our tool creates this, which independently scores each contract. The 10 columns from the right and the graphical representation of the score below it, are produced from those the previous form that I showed you, and then it automatically picks the best 5 to maximize the score. So those columns that are green are the best 5. The orange column is the final best score you get for each subfactor, scoring subfactor, with the total at the bottom. In this case, it's 44 out of 50, which is good. This is a small business submission. So this is specifically telling you, hey, you're good to go. You don't need a partner. You're a few points above the minimum threshold of 36. So everything is good. Maybe the total comes to, say, 32, in which case where this shows you where you're missing points and what partners to look for to actually get those points above 36. So we call this the eligibility assessment service that we're providing. And if you're interested in our eligibility assessment service, you can click on the offer tab on the right hand side panel to go to the link to read more on the service and request it if you want. Let's discuss substantiation now. Remember, the proposal you're supposed to provide is essentially the documents that prove your self-score is justifiable. These are the award document, perhaps, the statement of work, the SAO, the FPDS printouts of the contract. FPDS is the government website that has lists all the contracts. So it's considered official document when you have a printout of it. The CPARs or the JP6 in lieu of CPAR, and the JP3 form if your contract's NAICS is not what it's supposed to be, or if you're a sub and want to prove relevance and other QP subfactor information. So you need to tag and highlight the relevant information on each piece of document. Let's see some example of this. So this is an example of Word document with relevant pieces of information highlighted and tagged as well. This is an FPDS printout, again with relevant pieces of information like contract number, dates, values, etc., highlighted and tagged. So this is how the documents. Now you can see that there are a lot of moving parts involved, so you need to know what documents you need to present to justify each point score. They're not necessarily just one document required per point score. So you need a checklist sample here, for example, to ensure that nothing is missing. This is an example of a checklist for the 5 contracts that were selected for QPs are listed at the above under 3. Those are the 5 contracts, and below it are the documents that are needed. And when it's ticked, it means that it's ready and it's prepared. So for each of the score factors, you might need different documents, and they have to be tagged, highlighted, things like that. So a lot of document management work needs to be done. Okay, so that brings us to the importance of compliance in these self-scoring proposals. Due to shortage of time, I will not go into the slides about compliance. I just want to emphasize the importance of compliance, as I've seen many companies, in fact, lose because of not paying enough attention to this and not paying the price for ensuring compliance when they're preparing their proposal. So please go through the slides that I have put in here and discuss it with your team when you are actually preparing your proposal. Now, with regards to price, there's always a question as to how price delay plays in the self-scoring proposal submission. The short answer is no score is given for price. They just check it to be within the acceptable range and complete for all items. That's it. A few points. You can refer to this slide later, but essentially you have to provide pricing for 20 LCATs at the SME subject matter expert level, and you want to make sure that you're not below the maximum you are below the maximum acceptable government rate. And that's all there is to it. They give you what is the maximum acceptable rate. You just want to make sure that you are below that. That's all there is to it. So it's very easy to prepare your price form. There's a form that comes with it. With the RFP, you just have to fill it out. Okay, teaming is extremely important in OASIS Plus. The short rule is if your own score cannot be above the threshold, use teaming, period. No indecision. In OASIS Plus, everything is about the score. Whether you get your score all by yourself or you have a team of 5 subs, for example, the government doesn't care. At the end of the day, the score is the king. Now, some key points here. I will not go into the details of all of them, but essentially, I recommend, or we recommend as our company, that if you're not 3 to 5 points above the threshold, so this is new. If you're not 3 to 5 points above the threshold, consider using a partner. You need those cushion points, those 3 to 5 points. For JVs, MPJVs, prime sub relationships, all are acceptable. You can use the partners contracts for QPs and FEPs, which account for nearly 90% of the total score. One important factor is that if you're a small business, your subcontractors must also be small under that particular domain. You can read the rest of these points that I've listed here later on when you refer back to it. And we have a free partnering portal. You can see the link here. I'll put it up on the chat as well. So you can actually register here, go find your partner, whether you want to be prime or sub. And this way you can actually communicate with them and reach an agreement and work from there. So this is a free partnering portal. We've already, I think 400 companies registered and got together during the previous OASIS Plus submission. So this is something very helpful. Okay, and this is the first page of that site. Let's now discuss strategy and share some experience. So this is perhaps the most important opportunity for many businesses for the next 10 years, or I should say 8 years. There is no competition, so use all means possible to win a seat, including partnering with other companies, either as prime or as a sub. Expand on domains. If you have past performance in any domains other than your main domain, but not the required 5 QPs, don't relent. Use partners and expand your grasp. by going after multiple domains. This holds true for both small business and unrestricted tracks. For small businesses, don't stick to just your own set-aside track. First of all, you should also go for the total small business track. It's considered separate from 8A Hub Zone WOSB and STV OSB. It's a complete track. And secondly, if you have strong QPs, by all means go for the unrestricted track as well. Say you're sure that you get above 42, why not go for unrestricted as well? At the same time, don't be overconfident. Self-scoring proposals are all about analytical thinking. Good writing skills, which is the key strength of us proposal managers, is of no help here. You need to have good analytical thinking capabilities and good document management. Now, outsource if you have not done this before. Even if you have, get your proposal reviewed by an outside source. I've seen many companies lose because of not doing that. Now, focus on your QPs. They are the driving factor. I think I've shown that in different ways to you. First, do an eligibility assessment to understand your gaps and the need for teaming. Maximize your score. Use a per contract scoring system to see what your score looks like. If below the threshold, that's 36 for small business, 42 for unrestricted, select a partner as soon as possible. Companies are already teaming up, so you need to hurry. Ensure that you have 4 to 5 cushion points, as I mentioned previously, even if you have 2 partners to get them. Maximize the use of your subcontracts and or commercial contracts if you have any. There's no difference. You get the points and that's it. Check compliance, think compliance, and eat compliance. It's really important. Don't lose time. Time is of essence. You don't want to miss the 2026 task orders. So start yesterday. Start as soon as possible. And here I wanted to share our experience in terms of the time and resources needed for the preparation and submission of the OASIS Plus proposal. There are essentially 4 main phases. There is a phase 0 eligibility assessment if you're unsure about moving forward, but there are 4 main phases. Phase 1, contract selection and score optimization. Phase 2, preparation of the proposal documents. That's essentially the proposal preparation, or we call it substantiation. Phase 3, compliance reviews. It's a phase by itself, important. And then phase 4, uploading to Symphony. Symphony is the government's portal. Don't underestimate this. It usually takes 2 or 3 days. It's not a copy paste. So the graphical representation of the time and resources for each phase is shown also. So you can see that 50% of the time is spent in phase 1, contract selection and score optimization. This is the average we have found preparing over 200 OASIS Plus and other self-scoring proposals. So I just wanted to share this with you as well. So how can we help you on OASIS Plus? Here are the services we have. We have free consultation. Just we set up time to call and we discuss, answer any questions you have. Free partnering hub, which I showed you, and you can go to the website and register and then start finding teaming partners. Pre-qualification assessment, again I gave you the link, $490, so that you don't spend money on something that you don't have the minimum capabilities. Also it gives you where your gaps are, so you know how to partner with others. Full proposal development with dedicated proposal team. So we do scoring, assessment, optimization, full proposal assembly, cradle to grave. Everything is on us. Full and multiple compliance checks, uploading to Symphony. All of this is on us. We are different from other companies. Some companies just give you consultation. That's not how we work. We don't give consultation. We take the responsibility, because at the end of the day, we want you to win. It's good for us, our win rate. It's good for you. You don't lose your money and you get awarded. So we take the whole, heavyweight and work, and you just provide us with the documents. We do everything else for you. And finally, for those of you who have in-house teams, we do reviewing and auditing. So we do 2 rounds of compliance checks and score optimization checks, and we also help and audit uploading to Symphony for you. So these are the services we provide. Here are contact information, myself, email and phone number, and my colleague Maron Freedy. So if you have any sales inquiries or you want to set up calls, just contact Maron. Email is usually better for both of us. Technical questions for me, and consulting and sales inquiries for Maron, and we can set up calls, jump on them and discuss any of your needs or answer any questions you might have. So we have a few minutes to answer some questions, although I see there are quite a lot. Question from Joe. Did I understand correctly that for the collection of task orders case you mentioned, we can use task orders smaller than 500K? Yes. But it works like this. You have to have a single award IDIQ or BPA and be prime on it. Then you can add up as many task orders under it. It can be $10,000 or $50,000, whatever value, it doesn't matter. You add them up together, whatever value they have, number of FTEs, number of subcontractors, number of domains, all of them are considered as one contract. So maybe, one task order had this subcontractor, the other task order had a second subcontractor, and the third task order had the third subcontractor. So you can add these 3 and consider the one contract with 3 subcontractors, so you get the points for subcontractors, and it works like that. Question from Angela. If I'm submitting for women-owned small business track, does my sub also have to be women-owned small business? No, Angela. So they must be small. That's it. They don't have to be the same set aside as you. Okay, I will skip over sales and services inquiries. I will reach out separately to you guys. Question from Fred. Can we use work we have done with state and local governments? Yes, of course, as long as they adhere to the requirements that I mentioned, like the annual value and the recency and everything, you're good to go and you can use them. Another question from Fred. State contracts don't have NAICS codes associated. What should be done? Okay, so whether you're using state or local, commercial contracts, or even federal subcontract projects, you need to get that JP6 form signed by the owner of the project to prove relevance. That's in lieu of not having NAICS codes. So even if you're a prime contractor subcontract, you're their subcontractor, you can't use their NAICS code because the government doesn't know what type of work you did for that prime. So you have to get that JP6 form signed by the prime. Question from Martha. Can we use state contracts for FEPs? No. FEPs, as the name stands, Federal Experience Projects, must be federal contracts and not state and local. Question from Stan. Can we submit as a prime and also in another prime's team, be in another prime's team? Yes, but there is a catch. Make sure you understand this catch. 2 submissions cannot use the same contract, that's for QPs and for FEPs, if they're submitting for the same domain and same track. If the domain or track is different, it's okay. But if they're the same, then both submissions will be disqualified. So make sure that that doesn't happen. Question from Alan. Is there a difference in scores between having a CGFM and CDFM certifications? Our people have CGFM but not CDFM. No, there's no difference. As far as the score is concerned, you just have to show that you had 5 personnel with either this or that, or even a mixture. That's fine. If you have 5 or more personnel in a contract, you get the point. Okay, we are out of time. We need to stop. There are still questions remaining, so I would like to first apologize for not being able to answer the rest, but I will certainly respond by email. So thank you everyone for participating in our webinar. I look forward to seeing you in our future webinars as well, and have a great day.
tab,